Meet Jane. Jane has been working on her credit for a while now, with the hopes of buying her first home. She's aware of the impact that a good credit score can have on many aspects of her life. Meet Richard. Richard has not paid much attention to his credit. He has not familiarized himself with the things that affect his credit for good or bad. He too has aspirations of buying a home in the very near future. Ironically, Richard and Jane are shopping for a home at the same time, and as luck would have it, they've stumbled across the exact same house. They even spoke to the very same loan officer. Jane has been preparing for this moment, but Richard has not. In each of their meetings, the loan officer begins to discuss interest rates, estimated insurance payments, and what their total escrowed payment would be. As you can start to see, Jane's preparation is really starting to pay off. Seemingly insignificant decisions early on have now set her up for success during the home buying process. Although she wasn't excited about paying interest on her new home, she knew it could have been way worse. Richard still hasn't realized the negative impact that his credit score could have on this potential purchase. Once amortized out, you can see how drastic the difference in total amount paid for just a $130,000 home. As you can see, the differences are significant. Most people don't know how to fix, build, and/or maintain their credit. Often, what you think would help your credit will actually hurt it. That banks would prefer you to have a 620 over a 760 credit score. This is often shocking to the consumer, but you saw in the previous example, the banks made over $36,000 more profit due to the credit score alone. 79% of all credit reports contain errors, most of which are negatively impacting your credit. Your credit score impacts more than just your interest rate. It also impacts things like your auto insurance, your home insurance, your ability to negotiate when buying anything on credit. Let that sink in. And now, more than ever, many employers are starting to view your credit before making a decision to hire. Jane knew this, and in just this one example, it saved her over $35,000. Sadly, Richard didn't know, and there is a good chance that he still doesn't know. There are things you can do. Educate yourself. You can do this by following 1 Minute Mortgage Pro on Facebook and YouTube. They provide 1 to 2 minute educational videos that will help you prepare to buy a home. You can also call or email. See the contact information at the bottom of this page. Knowing is half the battle, and a little education in the mortgage industry can literally save you tens or maybe even hundreds of thousands of dollars. Just ask Jane.